Are you tired of listening to the illogical diversification advices by those who falsely call themselves pundits of the stock market? Or are you confused whether to stick to a few number of stocks or a handful of them? Should we opt for large cap companies or companies with relatively smaller market cap? If you're struggling with the concept of diversification, then this is your lucky day. Because in this video, we're going to talk about what is diversification and how can you diversify the right way in the Indian stock market. How did a famous Indian personality like Mr. Mohnish Pabrai manage to make billions in the stock market? What was his diversification strategy? And how can we implement the ideas of diversifying the right way in our investing careers and make millions and even billions in the share market? Before we begin with the video, consider subscribing to our channel and turn the notifications on so we could keep making more videos for you guys to learn from.
Audio Jungle. Audio Jungle.
Now, there are two opinions you're likely to hear in the Indian stock market. The first one is, don't put all of your eggs in a single basket or you might lose all of them. And the second opinion you might have heard would be, it's okay to put all your eggs in a single basket, but you should keep watching them. Now, the first idea is stressing that it's a good idea to own multiple companies instead of a few, because if a catastrophe happens to a particular sector, you will always have other companies to balance up for the losses you just endured. While the second opinion stresses that when you own a lot of companies, there's a good chance that you won't understand any of the underlying business models, and that is a big risk. So what's the middle ground here? Let's have a look. Usually, an average investor is someone who goes to office at 9 a.m. in the morning, comes home by 5 p.m. and spends the rest of the time with his family or hanging out with his friends. In other words, एक साधारण investor के पास इतना समय ही नहीं कि वो simultaneously attention दे पाए to keep track of his diverse portfolio. सीधी बात बोलें तो if you can easily understand a company well enough to know everything about the underlying business model as well as the competitive advantage and the management, then you don't need to incline towards diversification. Only picking a few handful stocks जो value for money हो, growth opportunities रखते हो और उनकी market dominance हो, they will do perfectly fine for you. To support our argument, Warren Buffett says, diversification makes very little sense to those who know what they're doing. ये तो हो गया पहला रीजन कि आपको डाइवर्सिफाई क्यों नहीं करना चाहिए, वो भी एट द बिगिनिंग ऑफ योर इन्वेस्टिंग जर्नी. अब मूव करते हैं दूसरे रीजन पर, which is slow growth. Let's say you didn't listen to our advice and invested in a variety of different stocks. Some of them were Star Health, Tata Consumer Products, the Titan Company, Maruti Suzuki, State Bank of India, Larsen & Toubro, etc. You invested your capital scattered among 20 different companies. You followed the advice of your favorite investing guru, but after a period of 10 to 15 years, your progress towards your financial freedom was found to be slower than a tortoise. What was the reason? Just like a diverse portfolio of stocks saves you from losing all of your eggs at once, it also weighs down your profits when most of your stocks are growing and only a few 2 to 3 stocks are underperforming or going in loss. Now, what is the right way? What should we do if diversifying isn't the right choice? According to the renowned stock market guru and one of the leading names in the Indian stock market, Mohnish Pabrai, an investor can be plenty diversified with just 4 stocks. With more than $600 million in assets under management, Pabrai has almost 80% of his portfolio in no more than 10 stocks. The interesting thing is that the bulk of his holdings is composed of businesses that were ignored by the market. But deep down, they're hidden jewels that were discovered by the legend himself. Such opportunities are not common, but when Pabrai finds them, he throws the absolute kitchen sink at them. He also runs investing funds named Dhandho Funds and Pabrai Funds. Since 1991, Mohnish Pabrai has managed to get annual returns of more than 28% after all fees and expenses. And this is an unprecedented record that places his funds in the top 1% of all actively managed funds. The point to be jotted down over here is that had Pabrai made comparatively smaller investments in his ideas, there's no doubt that his performance would be less than his current track record. He's engaging in what Charlie Munger wisely called focused investing. To put it in a nutshell, indeed, it probably isn't a good idea to have a one-stock portfolio. Similarly, it also isn't a good idea to have so many investments that your biggest winning stocks become diluted by over-diversification. In his book, The Dhando Investor, Mr. Pabrai pretty much explains everything about how much of each stock should we own when going for a mix of concentration and diversification. We call it the classic heads I win, tails I don't lose much approach. Furthermore, Pabrai argues in his book that the best way to go about a portfolio is to start with distressed and neglected industries with great business models. This is just another way of saying go for the stocks with a hidden PE of 1. Diversification is considered an investing basic, and most of the finance gurus out there take it as the gospel of the investing world. No doubt that the conventional wisdom dictates that diversification is the way forward, and we are often told to spread our money across a variety of stocks and assets to shun risk. But whenever we look at the investing careers of some of the great names in the Indian investing landscape, such as Rakesh Jhunjhunwala, Radhakishan Damani, Mohnish Pabrai, and Azim Premji, there's a trend that is being followed. They all seem to be following a blend of concentrated allocations and diversification, which seems to be working great for them. After all, they are billionaires, if not multi-millionaires right now. So how can an ordinary investor, just stepping into the Indian share market, make the best possible use of diversification? And the answer to this question is a simple one. According to the greatest investor of all time, Warren Buffett, diversification is protection against ignorance. To put it in investing terms, don't invest until you find a great business. If you spread yourself too thin, you will compromise yourself and your chances of making big profits in the stock market. For now, this was just a glimpse of how diversification can be a source of your limited profits if not done right, and how we all can learn a thing or two from the wisdom of Mohnish Pabrai and his journey with a blend of a concentrated portfolio. If you want us to make a video on how some of the greatest Indian investors of all time used diversification to make millions in the stock market, let us know in the comment section below. Until then, make sure you press the like and subscribe buttons for more exciting content.